a pleasure and to have my Italian heritage. My grandfather was Italian, arrived to Argentina, and then the family moved to Venezuela. So, will I be able to pass the slides? Oh, right here. Yeah. Thank you. Well, it's a pleasure to be with you today. A very nice venue, very nice group of people. So I'm really happy to join you today. I'm going to be speaking. My specialty is, of course, energy policy, and so I will talk a lot about the oil side of this story. But I wanted to start a little bit with, of course, the politics of what just happened. And the first thing that, you know, this pollster, Bloomberg hired a pollster to do some polling on what just happened in Venezuela. And this is a poll that is across all Latin America. So Latin Americans, 60% of Latin Americans approved that Maduro was captured by the US government. That was very interesting to me, but because, you know, traditionally Latin Americans would be not particularly enthusiastic about US intervention, but that tells you a lot about what Latin Americans feel about Nicolás Maduro, that they were overwhelmingly in favor of his capture. And most people do believe that this will eventually lead to democracy in Venezuela. Again, this is a representative poll of all Latin Americans. You do see 8% that think that Venezuela is a democracy right now, which of course is not, but the vast majority think that. And also, they were asked about Delcy Rodriguez, the current interim president, and the vast majority of people don't trust her. And I think with very good reasons. We can talk about that if you want later. And the other thing is that the region agrees that the collapse of the Venezuelan economy, the responsibility is largely of Nicolás Maduro, and I would add of Hugo Chavez, his predecessor, that started with that. And this is a sort of a subsample of just Venezuelans, and it's divided among all Venezuelans and the Venezuelans who live abroad and the ones who are in the country. And of course, the ones who are in the country sometimes might be fearful about answering, you know, a pollster, but nevertheless, you can see a very significant approval versus disapproval of the capture of Maduro. And of course, in the Venezuelan diaspora is 90%, 91% approval, and just 6% disapproval. And in terms of the Venezuelans who are in Venezuela, the overwhelming majority would vote for Maria Corina Machado if there were an election. So I just wanted to show you that because, by the way, there are other questions. The poll is actually pretty comprehensive, and one of the things that really caught my eye is that today President Trump is more popular in Venezuela than in Texas. So that was interesting. So let me get a little bit to why Venezuela ended up sadly in the situation that it is, and a lot has to do with the fact that an oil economy is very volatile, and that could lead to economic volatility, but also, unfortunately, to the fact that Hugo Chavez was elected to power and then basically was responsible for the collapse of Venezuela's democracy and economy. And you can see here in that slide over there, you can see that that is the price of Venezuelan exports over Venezuelan imports, meaning if it goes up, it's great for a country because basically you can, with less units of export, you can get a lot more imports, right? And so you can see Chavez takes office and it skyrockets because the price of oil, which is, of course, Venezuela's main source of revenue and exports, basically went up because this is the early 2000s when China's growth led to a massive commodities boom in Latin America. But Venezuela, and this you can see here, was the country in the region that by far benefited the most from the oil windfall, well, from the commodity windfall, because For example, the second country that benefited the most was Chile because of copper. But as you can see, most countries in South America benefited tremendously, not the countries in the Caribbean, because they don't export raw materials or commodities to China. They, in some cases, they even compete. The upper figure there shows that the popularity of Hugo Chavez was basically perfectly correlated to consumption in the country. So basically what we had is that the president used all the windfall that the country got, that massive amount of revenues from oil, and not only he spent most of it, not in investment, but just, you know, in programs like distributing money to the population, and another and very significant increase in the government payroll and increasing government wages, etc. And basically, he also dramatically increased the foreign debt of Venezuela. Venezuela today owes about $180 billion, and the country's exports are, this year, because they're going to go up, they're going to be 14. So it's like, you know, more than 12, you know, years of all Venezuelan exports. So it's basically impossible to pay at this point. So, and Venezuela did very poorly compared to other OPEC countries, as you can see on the left side there, and other Latin American countries, as you can see here. So the country received the largest windfall in the region, but it has the lowest growth in the region and the highest inflation. All of this is with Chavez, not with Maduro. Maduro, of course, brought the massive collapse. But what I'm trying to suggest is that basically Hugo Chavez was the source of a lot of the collapse that came afterwards, because he basically not only wasted a massive windfall, but he created the conditions for the collapse afterwards. And this is a very important figure. That is the price of oil of the Venezuelan basket. Venezuela produces heavy oil, so it's a little bit lower price than the light oil from the US, for example, the WTI. And you can see the price of oil, and this is the fiscal deficit of the government as a percentage of the GDP of the economy. So to give you an idea, countries to get more than 10% deficit over GDP, it's a country that is in a massive financial crisis, in a terrible situation. Well, Venezuela, in its best year in terms of revenue, had the largest deficit that it had in recorded history up to that time. So basically, the government was already printing money, was dramatically getting into debt. China was willing to give Venezuela $62 billion in loans, because they thought, well, this country has so much oil reserves and the price of oil is so high that it's impossible that they will not be able to repay us. But guess what? It didn't happen. So, and of course, afterwards, this is what happened when Maduro came into power. You can see Venezuela, which was sort of in the middle there in Latin America. Venezuela, as was pointed out in the 1950s and 60s, was the richest country in Latin America. But Venezuela became the poorest, with Nicaragua and Haiti. And the collapse of Venezuela is among the worst collapses that any economy has had in history, not counting civil wars. No, so really, really tragic and horrible situation. So now let's talk a little bit about the oil side of the equation. So Venezuela, as you can see here, starts becoming a relevant oil producer in the 1920s. Basically, Exxon and Shell are the two big companies that start investing in the country. And Venezuela, by the end of the 1920s, is the largest exporter of oil in the world. Not producer, the US produces more, and I think Russia too, but the largest exporter. It surpasses Mexico, and it retains the position of the largest exporter of oil in the world until the late 60s, when Saudi Arabia surpasses Venezuela. And as you can see, production peaks in 1970 at around 3.6 million barrels of oil. Then it starts to decline, partly because the government had not given new contracts to private companies, and they were going to expire in 1983, so they decided not to invest as the end of their concessions became relatively close by. And then, of course, nationalization of the oil industry in 1976, and then OPEC quotas. The OPEC decides to reduce production. Venezuela was one of the founders of OPEC, along with Saudi Arabia. Then, in 1986, OPEC abandons the quota system because they had lost a tremendous share in the market. And they decide to open up production, and particularly the Saudis start increasing production very fast. And Venezuela too, and that's when Venezuela does a second oil opening to the private sector. So the industry was nationalized in 76, reopened in the early 90s, and particularly in 1996, 97, 98, a lot of contracts were given. But guess what? The price of oil had collapsed, and the economy was doing very poorly, and Hugo Chavez gets elected. This is a guy who had attempted a coup in 1992, and people were fed up with the political system, and they voted the guy in, and very quickly he changed the constitution, took over the military, control over the national oil company, fired half of the employees of the national company. My wife and I both worked for a bit in the national company, and at the time was a really well-run company. To give you an idea, there were more than 1,000 PhDs from the best universities in the United States working in the company, and 95% of them were fired during that period. Here, what you can see there is that the production starts to decline as soon as Chavez gets into power, which is the gray area. But what people didn't notice is that actually private companies were increasing production significantly, but the national company was falling like a rock. And so on average, production only declined, not that fast, relatively gradual. But what you were not witnessing is that the national company was in complete disarray, whereas if the national company had maintained production on their fields, the production will have actually gone up by more than 500,000 barrels, or even 700,000 barrels. So look at this. This is a very interesting chart. On the left side, you have in the last 20 years, where did oil demand grew and where it went down. And basically, you can see, this is a story about China. China had a massive increase in oil demand. On the right side, you see that the supplier of that demand was the United States. Basically, the shale revolution added a massive amount of barrels, as you can see there. And the US became, again, the largest producer of oil in the world. Today, it's crazy. If you include all liquid hydrocarbons, the United States produces about 22% of global oil production. And if you add Canada, a quarter of the barrels are produced between these two countries. But look at now the countries that went down. Most of them on this side are like civil wars or countries with massive political problems. And on this side, you have countries that basically run out of oil, the North Sea, the UK, Norway. Mexico is sort of a mixed case because their best fields got depleted, but also they didn't do anything to replace them. So here you can see Venezuela versus the rest of OPEC, and you can see that basically Venezuela declined dramatically versus OPEC, which went up because of the boom. And that what I mentioned before about PDVSA. PDVSA produced, the national company is called PDVSA, Petróleos de Venezuela, and that company produced 3.1 million barrels in 1998, and before US sanctions, in 2016, PDVSA produced 1.2, so almost a third of what it used to produce. By the day that oil sanctions started in Venezuela, they were producing half of that, like 600,000 barrels from 3.1. So imagine such a collapse. And of course, then US sanctions did have some impact. Here's the composition of production today in Venezuela. About half, a little bit less than half, is produced by the national oil company of that much lower amount. But Chevron, you can see, is the second largest producer. It produces 25% of Venezuela's oil. Then you have the Russian and the Chinese national oil companies, and then a tiny bit of European companies, particularly Repsol is the biggest one, which is Spanish company. And here's a little bit about the Chevron's production. Chevron produced about 250,000 barrels. Then it went down because of U.S. sanctions, but then it was allowed a license first by the Biden administration and more recently by the Trump administration, and production has been going up. So what are the implications of what just happened in the last month in Venezuela for the oil sector? The first thing is that Venezuela's exports were collapsing in December because of the US blockade. As you probably remember, the US seized one of these tankers going out to the black market in China. 80% of Venezuela's oil was being sold in the black market. The black market means that these are vessels and operations that are not authorized by the US Treasury, that the OFAC, which is the entity within the Treasury that sanctions companies or countries, basically were sanctioned. And 16% went to the US with a Chevron license, and 3% went to Cuba, or 4%. Until 2018, Venezuela exported 500,000 barrels of oil to the US. The oil that Venezuela exported, and you will see it here in a second, Venezuela reached a peak of 1.5 million barrels to the US, then it went down all over the Chavez period, and it went to zero during the sanctions, the full sanctions period. Venezuela's oil is very attractive for the refineries of the Gulf Coast in Texas and Louisiana, Mississippi, because these refineries were optimized. They made significant investment to process this heavy oil. And at the time when they made these investments, US production was going down, and the production of Mexico and Venezuela, which were heavy, was going up. And so they made this very significant investment, and then all of a sudden the world changed, and the US went up, and Mexico and Venezuela went down. So they got a bunch of oil from Canada, but Canadian oil has a hard time getting down here because the famous Keystone XL pipeline was never built, that was going to bring 800,000 barrels to the Gulf Coast, and so some of the oil does get here, but the Gulf Coast consumes, I think, about 2 million barrels of heavy, and Canada can only provide about 20% or a little bit more of that. So a lot of the oil that used to go to the black market now is going to be redirected to the US. Some of it, the US government took over the control over Venezuelan exports, and some of it has been allowed to go to Europe. They just started one tanker going to Europe. So the US will, because there is so much inventory of oil, there are about 30 million barrels of oil that have to be exported that are in inventory in Venezuela. They have had to be, fast and pragmatic. They hired two big trading firms, Vitol and Trafigura, to sell that oil. So the US is probably going to absorb most of the exports from Venezuela, which would be good news for Venezuela in the sense that they will pay full price instead of the big discounts that they had to sell oil in China because of the black market situation. But that means that Venezuela will have to displace exports that come from Canada and Mexico to the US by undercutting, their price and being more attractive. Very importantly, the US government has taken over control over the revenues. So this is just as we speak, being designed, but the first $500 million of Venezuelan exports were deposited last week in the Qatar National Bank. Don't ask me why Qatar, but that's the place where both Venezuela, the Venezuelan regime and the US government agreed. and they started to be sold to Venezuelan banks for Venezuelan importers to buy dollars actually yesterday. So they're selling $300 million, and that has had an immediate positive effect on reducing the devaluation rate of the Venezuelan currency, the bolivar, and reducing the expectations of hyperinflation. The country was moving into hyperinflation. So Chevron will be the main beneficiary of the new sort of regime because it's a company that is already there, already has signed contracts, already was investing, and what they now got is a better license and more capacity to export their oil to the US. So it's likely that Chevron will increase the number. They have the only 2 oil rigs operating in the country today are operated by Chevron, and they will probably double that in the next few months and will increase production. They say about 50% from their 250 right now, so about 130,000 barrels. But that is much less than, of course, than the Venezuela's potential, and I will talk about that in a second. Then you have 3 European companies that could add some additional barrels, but that will take longer than Chevron. And then you have the possibility, they just announced a reform of the Venezuelan oil law that I will talk in a second, but they just, the Department of Energy of the US is trying to convince or attract US independents, the so-called wildcatters, that are so common in Texas, smaller companies that specialize in increasing production from declining fields with, putting technology and being more efficient. And the idea is that could increase production, but that will take even longer in terms of you have to first initiate those contracts, etc. So, but the other potential key players, of course, are Conoco and Exxon. It just happened that these 2 companies, Conoco and Exxon, were the ones that Hugo Chavez expropriated. Chevron decided to stay in Venezuela despite the forced contract renegotiation and the increase in taxes. The Europeans decided to stay, but Conoco and Exxon went for international arbitration, and they got awards. In the case of Conoco, of about $13 billion. In the case of Exxon, I think it was more like to the order of 3 or something. But they are owed still, Exxon is owed about 1.6 billion, and Conoco is owed $12 billion. It's the second largest creditor of Venezuela behind China. So for Conoco, this is a very big deal. But notice that for both Conoco and Exxon, it's a very different proposition than for Chevron, because they would have, Chevron is not risking any additional money in Venezuela. They are just using their cash flow from Venezuelan exports to reinvest. In the case of Exxon and Conoco, these companies will have to either go back to their previous oil fields. By the way, the oil field of Exxon is now run by the Russians, so that's a problem there. And the question is, are they going to be willing to invest billions of dollars again in Venezuela before they get any revenue? And of course, the answer is they have to be very careful about that, no? And I think that Conoco has more incentives to return because they have all this debt that if they don't go back, it's unlikely to be paid. Venezuela has basically said to Conoco, I will not pay you anything. And by the way, the Trump administration did say the money from Venezuela's oil exports is not going to go to repay the debt. So that, of course, is causing some controversy with the creditors because, of course, they want to get some of it. The bottom line is that, by the way, this is a map of Venezuela, and basically we have here, I think, a couple of people from Maracaibo. So you have the traditional basin where most of Venezuela's oil was produced, from a century ago until recently. That has unfortunately declined because of lack of maintenance and investment. And then you have the north of the eastern side of Venezuela in the state of Monagas that has also some light oil and conventional production. And then you have the massive Orinoco Belt. The Orinoco Belt is all that area north of the Orinoco River that has some of the largest oil resources on Earth, but it's extra heavy, meaning that this is a very dense and viscous oil that it does flow to the surface, at least a small percentage of it when you drill, But once it gets to the surface, it looks like asphalt. It doesn't move, basically. And you have to blend it with a refined product or a light oil to actually be able to transport it to the ports and also to put it on a tanker. So that is, extracting it is not costly. What is more costly is transporting it and refining it. So Venezuela has almost unlimited quantities of that. I will show you in a second. So here's, you hear a lot, Venezuela has the largest oil reserves in the world. Well, Venezuela's reserves have not been audited using the standards of private companies in the world. So that figure is not, it's overestimated. In fact, I know for a fact that Hugo Chavez told the national company, I want to have the largest oil reserves in the world. And so what they did was to overestimate the amount of oil that they could recover from below. And basically, of course, technically, the US Geological Survey says that you can recover from Venezuela 500 billion barrels of oil. Let me put these things in perspective. Venezuela, below the ground in the Orinoco Belt, has more than 1 trillion barrels of oil down there. But that doesn't mean that those can be extracted or commercially extracted or are economically viable, right? The US Geological Survey says that about half of it is technically recoverable. But of course, at what cost? No, that's a big question. And so here you have a figure that shows how much oil you could recover, is an estimate, how much oil you can recover at different prices of the barrel of oil. So Venezuela would have a figure similar to what the President Chavez claimed if the price of oil goes up above $150. But currently, the Venezuelan price, the Venezuelan heavy is sold at 50, so a third of that. So today, a better estimate of Venezuela's reserve is 90 billion. But to give you an idea, that still is the 6th largest reserve in the world, is much larger than the US reserves. And of course, the US, as I mentioned, produces 22 million barrels of liquid hydrocarbons, and Venezuela produces less than 1. No? So bottom line, don't want to bother you with the technical details, but it's not true that Venezuela has the largest oil reserves in the world, but it doesn't matter. Why? Because at the current rate of production of Venezuela, we can produce oil for 1,000 years, and we still will not run out of oil. So the bottom line, this is a giant opportunity, even at the current price environment. But of course, Venezuela has done everything not to develop the opportunity. The risks in Venezuela are above ground, are not below the ground. The risks have been politics, corruption, mismanagement, security issues, and particularly contract reneging, systematic non-compliance of the contracts that the government signs. Here you can see some of the players that have reserves in Venezuela. So this is another issue. CNPC, which is the national company of China, and that unpronounceable Russian company, Rosneft, which is a national company of Russia, they hold some of the largest reserves in the country. So the question, of course, is, are they going to be allowed to develop those resources? So far, the Russians were supposed to produce 1 million barrels of oil in their fields, and they are producing 110. So just 11% of what they were supposed to, and their potential. And the Chinese is a similar story. Eni and Repsol, as you can see there, what they have is mostly natural gas reserves. So these are my estimates about scenarios about how oil production could go up in Venezuela. The upper one is something that we got from a group of experts. I'm an economist and political scientist. I'm not a petroleum engineer or geologist, but the potential of the geology of Venezuela with the reserves that I just mentioned is to grow to 6 million barrels of oil, which would mean that Venezuela will surpass Canada and will be one of the top producers in the world. But that is almost impossible to attain with the political issues that the country faces. Or even if everything goes right, it's very unlikely that we will have that, because that will require, let me put it that way, imagine that the oil of Venezuela magically is moved to Texas. Well, if that happened, Venezuela will be producing more than 6 million barrels of oil. But of course, that's not going to happen, right? And so the political issues will persist in Venezuela in some way or another. And so the second estimate is the plan that the Venezuelan opposition has, which is producing about 4 million barrels by 2036. So in a decade, Venezuela could increase to higher than the peak that we had before, which was 3.6, 3.7. The green one is sort of my estimate of what actually is likely to actually happen, because my experience is that things not always go right, but many things go wrong. And for example, a new government later on might change some of the things that were done before, or issues of crime or instability or some other obstacles. That's actually the history of most countries in Latin America. With the exception of Brazil and now Guyana, Latin American countries produce much less than their potential, significantly less. So I am adjusting for that. And finally, this line is more business as usual, sort of Delcy Rodriguez stays in power, the Chavistas stay in power, and basically there is an increase in production, but very, very limited. These are other analysts. In this case, this is Rystad Energy, a Norwegian firm that it's very good, that I work a lot with them. Their base case scenario, actually, with Chavismo in power, was a continued decline in production. Of course, nobody envisioned this weird scenario in which the Trump administration is telling Delcy Rodriguez what to do. No, that wasn't what they were thinking. But their expectation is that the growth will be much more like my more conservative scenario, because notice that is to 2040. I had it until 2036 to 2.5 or something. So they are very similar than my scenario. And then this is Energy Intelligence, another publication that has even less optimistic scenario. So you will see that depending on what is the emphasis of the analyst, if the analyst is looking more at the political obstacles, they tend to be much more conservative. If the analyst is more a geologist or a petroleum engineer, they tend to see the amazing potential, because the potential is amazing. The geological risk of Venezuela is very, very low. Basically, you know that the oil is there. You just need to drill and get it out. That doesn't mean that it's going to be profitable if you not do it well. And of course, if the government charges you crazy taxes. So I will not go into this is a small print, but I just wanted to mention a couple of things about the obstacles. Venezuela has a legal regime that is very much unattractive for foreign investors. Why? Because Hugo Chavez forced all companies that want to work in Venezuela to be minority shareholders of a joint venture with a national company, which is broke, corrupt, and has very limited capabilities. And imagine that for example, Chevron has 30% equity, but they are forced to give the money for the 100% of the project, and then the government didn't pay them because PDVSA, the national company, has the right to export the oil. So Chevron at some point told basically PDVSA, we are not investing anymore. And so eventually Maduro was willing to give Chevron a separate deal that wasn't in the law, by which Chevron was able to have a parallel contract by which they marketed their own oil and they operated their own field. But that wasn't written in the law, so it was sort of a weird exception to the rule. They just announced today. In fact, just before I came here, I just read the law proposal, the bill proposal, that they will change that to legalize the Chevron contract, to make it into the law. And other companies, of course, have tried to copy Chevron. For example, Repsol of Spain got a similar deal. What did they get? Basically, they got control over their cash flow. control over procurement and significant control over the operations, but not full control, because national companies still plays a significant role there. By the way, the other changes that they just introduced include a reduction in royalties, which is one of the biggest problems. Imagine that in Venezuela, according to the JV contracts, the joint venture contracts, there is a minimum effective royalty of 50%, meaning that if all the other taxes do not add up to 50% of gross revenues, you still have to pay an overtax. So that implies that even if you're losing money, you have to give to the government half of your revenues. Imagine how bad that could be in a low price environment, for example. It's catastrophic. So they're changing that, and they're allowing royalties of 20 or 15%, but completely discretionarily. So I think I wouldn't invest with a rule that says the government tells me you're going to pay 15% royalty, but tomorrow, if I wake up wanting to do it, I will go back to 33.3% and potentially even worse. So I think that the announcement that they have made today are not going to be enough to bring the big companies like Conoco and Exxon to Venezuela, and that will require some transition to a democracy to really get the big investment. Venezuela requires more than $100 billion in investment to get back to the level that I mentioned, the recovery of the previous peak, like between 3.7 and 4 million barrels. And that's not going to happen. What we will get is likely Chevron investing as they are, Repsol maybe investing as they are. Perhaps some of the government gave 2 years ago some service/production sharing contracts, meaning that the operator technically continues to be the national company, but they hire a contractor to run the field. And they pay them. These are contracts that exist in many countries, particularly resource nationalist countries that the national company wants to dominate and control. That Mexico, for example, is giving those contracts now. They are not typically very attractive, but they do serve for example, fields that are already developed, that all the infrastructure is there, and what you need to do is just, some investment in drilling some wells, and the recovery is relatively fast. So that's what they're aiming for. But so far, Secretary Wright, the Secretary of Energy of the United States, was, as I mentioned, trying to get the independence from Texas to go down there. But I think what they are proving today is not attractive. It's not going to be attractive for these companies. The other issue is that they already gave some of the best contracts to cronies close to the regime, with the exception of a couple of contracts that they did give to companies that are established, including one. The Wall Street Journal had a very interesting portrait, perhaps some of you know him, of an oilman from Texas called Rod Lewis, who has been the first player to get a contract in Venezuela. He got it because he thought that he would get a license from the Biden administration, but they didn't give him a license to operate. So bottom line, you need a lot of preconditions for Venezuela to actually have the recovery that it could. Those conditions to me are, first, some legitimacy of the government. This one doesn't have it. Second, a consensus among the leadership of the country that you have to open the oil sector with an institutional framework that is competitive, meaning that the royalties and taxes are competitive with other jurisdictions, and they are not. And they are credibly competitive, but it's not just offering a low royalty that you can increase next day. You need to have contracts that make it hard for the government to change, and if they change it, that you can get to international arbitration. And even then, Hugo Chavez did what he did to Conoco, but these guys are not even willing to offer that. So you will not even have recourse in that way, although they are announcing that some form of local arbitration might be possible. So to finish, I would say this: the risk of the oil industry in Venezuela are all above ground. There are massive resources. They are even profitable at these price levels. Of course, if the price of oil goes lower than this, to say $40 or $30 the Venezuelan basket, then some of these projects will not be on the money, even if you reduce the taxes or royalties. But Venezuela is lower cost environment than the US and Canada, but of course much higher risk. And so, well, basically that's the talk. I just wanted to close by saying that unfortunately the status quo right now is that we got Maduro out, who was the head of the snake, but the rest of the regime is there. And this is a very repressive regime that, even though the Trump administration has pushed to free political prisoners, etc., is still a very repressive regime and very ideological. Delcy Rodriguez, who is the current interim president, is a committed, radical person, communist, but she's also very pragmatic. And so she has been willing to negotiate with the Trump administration and offer him, everything he wants for now. But my sense is that that's just to survive another day until she feels that something might happen and she might be able to get back control over the country, which she has limited now because of the U.S. military power and blockade. Yes.
So, Michael, hold on. Is this on?
Yes.
Okay. We're going to have what's called a soft close. If you have to leave at 1, no problem. Do so quietly. We'll go to 1:10. Kathy, if you can warn us, maybe 2 minutes. Michael, first question, and then Dr. Agras.
Okay, it's my understanding that Citgo was sold to a venture capital fund and an individual by the name of Paul Elliott Singer, November 25. That's tied up in litigation, but the judgment has been, filed appropriately. The current new president, Delcy Rodriguez, is going to take a dive on the appeal in February, and that somehow or the other, the debt is going to be paid off in exchange for equity shares in the resulting company. My question is, how does that play in? And is it possible that the invasion and capture of Maduro was actually a way to facilitate and use that purchase of the company by the venture capital firm?
I mean, this is a process that has started a while ago because of all these creditors. They couldn't get paid, so they went for the only asset that Venezuela had outside, which was Citgo. This had tons of appeals, had been a very protracted process, but finally the judge, as you mentioned, in November said that firm made the best bid according to his advisors, and basically it would pay only a fraction of the $22 billion of creditors that are in line in that lawsuit. And sadly, it will sell Citgo for a very low price. So it's the worst state of affairs for Venezuela in terms of the future, right? Because you will get only about $6 billion of claims out, fully paid for just a few creditors, and Venezuela will lose their main asset that could be valued at double or more. So still the Trump administration has to give them an OFAC license to do it. But I think so far the expectation is that they will give it and that Citgo will be finally, sold by the end of this year. So that's, I think, the state of affairs. Both Delcy Rodriguez and the Venezuelan opposition wish that didn't happen, but I don't know if the administration is willing to stop that. The judge is very adamant in wanting to finish that.
Short question.
1, thank you, I enjoyed your talk. Number 2, I'm going to buy 1,000 shares of oil stock. Am I going to buy it from one of the companies you suggested, or am I not buying anything at all?
Good question.
Well, I think that if you ask me which company is the likeliest to benefit the most from Venezuela, it's Chevron. But of course, Chevron is a behemoth, and this is just a tiny bit of their business. When Maduro was captured, their shares went up very sharply, but then they went down almost to the... So, it's hard to know if that. Others that will benefit are service companies like Schlumberger, Halliburton. But again, Venezuela is for now not such a big deal that you will have a major increase. And then you have these smaller companies like the Rod Lewis's company or others. Some are private, some you cannot invest, but some are listed in the Canadian Stock Exchange, in the Toronto Stock Exchange, and are small caps, and some people might try that.
Demir Karsan, I've been in this business. The estimates you shown, does it include offshore?
Venezuela has very little oil offshore. It has a lot of natural gas, but there is a field offshore that probably ENI will develop, and yes, it's included there.
Right.
But then the rest, there's potential, but not. There are no proven reserves offshore except for that one field.
Because looking at how much oil Exxon found in
In Guyana, yes.
Guyana, and looking at the size of the offshore there,
Yeah.
I bet there's a big potential there.
So far, Venezuela has discovered tons of free gas, but very little oil offshore. So maybe there is, but maybe not.
Dr. Monaldi, your interest is broader than Venezuela. Do you think the Trump administration will allow the continuing sale of oil to Cuba in order to prevent the complete collapse of Cuba, which would create a great wave of immigration to the U.S.?
That's a great question. You know, we know the question was if the Trump administration will allow Cuba to receive oil from, or Venezuela to sell oil to Cuba, and what will be the implication for Cuba. Cuba is heavily dependent on Venezuelan oil. They don't receive as much as they did in the past, but they still receive a relevant amount. And crucially, in Cuba, the lights have, you know, oil is the fuel of electricity. So this is very crucial for them. Mexico came to the rescue, and AMLO and Claudia Sheinbaum have been providing Cuba some oil. And there was the fear that Marco Rubio will ask both Venezuela and Mexico at the same time to stop. So far, he's telling Venezuela no more oil to Cuba, but still allowing Mexico. However, the Wall Street Journal just published today that they found that there is a plan in the Trump administration for regime change in Cuba, and their objective is to do it before the end of the year. So who knows?
While we're waiting for the next question, is it possible that collateral damage is going to be that the Chinese say, we are furious, we have all of these reserves here, we're desperate, we're going to do something drastic, like take Taiwan while Trump is still president, because he loves the concept of force. Is that a collateral damage along with the Texas oil being destroyed with all of this cheap, heavy oil dropping the price down to $40, then Joe ought to be shorting instead of buying. So what's the collateral damage? China?
Yeah, I think
Taiwan?
that's a very interesting question. I mean, the losers could be Russia and China that have a lot of reserves in Venezuela. But as you point out, on the other hand, the Chinese feel emboldened that this signals a new sort of, a sphere of influence story in which if Venezuela can do this in Latin America, we can do it in our backyard, and the Russians can do it in their backyard. So there is that concern that this opens up this type of behavior. However, the Chinese were not happy in Venezuela. They were not investing because it was a disaster for them. A senior Chinese official once told me that there is a saying in Chinese that he translated roughly as, we thought that we were getting into a cruise ship and we got into a pirate ship. And so that tells you how happy they were. I think.
Okay, I have a question of the bride of the famous speaker. What do you want to share about coming over here, living in Houston, being married to this man? Does he drive you crazy? Is he a wonderful husband? So tell me a little bit. We need to know who this man is.
Yes, I'm awfully proud of him.
Thank you.
I'm also very honored to be here today. As I was telling Kathy, my family, my mother was a speaker also at the Rotary in Venezuela. My cousin on my father's side was president of Rotary Caracas, Venezuela, a long time ago. So it's a pleasure for us to be here today. So thank you so much. And we're also very familiar with the Junior Achievement, one of the nonprofits mentioned, and it sounds like it's a really, really nice initiative that you're going to have, that fundraising event. So congrats for that. Thank you.
Thank you. And again, thank you so much. Any other questions? Time for one last question? Okay. Thank you for answering so quickly. We were just honored that you were able to be, not only you were available, but you responded so quickly. And on behalf of Joel, I'd like to present you with this challenge coin that we give our speakers. And we invite you and your lovely wife to participate in anything that we do. We're not going to coerce you to join Rotary, although, there is a legacy here, and, there's no problem about joining. But if there's anything, and any of the visitors, if you want to participate in anything that we do, just go to our website and, register. We have the adoption fair coming up, and we need all hands on deck to play with the kids and to, to get this to happen. No experience needed. So, please just, join in. And we love the Baker Institute, as you can imagine. We have Ambassador Satterfield on speed dial, and Jean Ard, who's the queen of the office. We love her. So thank you again so much. Thank you, everyone. And without further ado, here we go.
Are you